Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to take us beyond the bell. It's our global simulcast with Madison Mills and Tim Stenovec. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership with YouTube. Maddie, interesting day in the markets here. On a daily basis, it's pretty much a mixed bag here as we close out the month of July.
Yeah, but still seeing the AI euphoria fueling some of the green that we're seeing on the screen, which I'll get to in a little bit. But seeing the likes of Palantir hitting 52-week highs today, it's just a reminder to me that this AI euphoria we've been talking about for so long is not necessarily in our past here.
So I said this earlier on radio, but I leave for a few months, I come back, and Michael Wilson at Morgan Stanley is a bull now? That's what happens?
I think so. I mean, you know.
I think he's conceding defeat.
That's true. That's a good point, because I guess he still does have a year-end price target of 3,900 for the S&P 500, but at least for now, he's ceding defeat. That's true, Scarlett. Thank you.
It's more a case of you can't fight the rising tide, right? I mean, the market has gone every which way against what he had predicted, and he's now looking at patterns close to 2019, which would suggest more gains to come.
Yeah, and I think, a lot of people are making a big deal out of the mea culpa here. But as you pointed out, his price target is still well below where we are. And even he still seems to be kind of planting those red flags that he planted a while ago, saying that that's still coming, maybe just not as soon as what he had originally sort of written into some of his market commentary here. All right, we get the closing bells here in New York on this Monday afternoon. The Dow Jones Industrial Average higher by about 0.3% on the day, and it's going to close out the month higher by about 3%. The S&P 500 higher by about 0.1% on the day and 3% for the month of July. The NASDAQ Composite closing out the month of July with a 4% gain. Only about 0.2% came here on this Monday. Meanwhile, the Russell 2000, that was your outperformer on the day. And believe it or not, it was your outperformer on the month, up 1% on the day and 6% on a month-to-date basis.
Yeah, it's interesting. Matt Maley put it well in his note this morning. He said, is avoiding a recession going to be enough to push the market higher when it's already expensive? And if the market does continue to trade kind of relatively sideways here, Scar, I wonder what the fuel is going to be moving forward.
Right. Well, one thing we are looking at is rising oil prices. Certainly in today's trade, WTI above $81 a barrel, and that is lifting the energy stocks as a group. That group is up by 2%, with 21 out of 23 members higher. You also have gains in consumer durables and apparels. That is Hasbro, Ralph Lauren, Nike, and the retail companies as well. That's Etsy. On the downside, pharma stocks off by 1.25%. And then you have food, beverage, and tobacco. So that is consumer staples losing about 0.8%.
All right, well, I want to talk about some of the green we're seeing on the screen today, starting with Adobe reporting better than expected results, up by a little over 3% on the close here, raising full-year revenue as well and announcing the introduction of pricing for some of their AI tools to come this year. One of those is going to include legal assurance against copyright infringement claims for some of their creative products. So that's going to be huge for a lot of the creatives that rely on Adobe services. Moving into more AI coverage, as I mentioned earlier, Palantir hitting their 52-week highs today, up by a little over 11% on the close. The CEO saying the demand for their new AI platform is without precedent. We're going to get those second quarter earnings in just a couple of weeks here, actually August 7th. And then I want to talk about SoFi, up by the most in a year after boosting its adjusted EBITDA guidance, citing benefits from deposit growth. They've got a really competitive rate of return, so seeing a lot of inflows on the deposits there. Also interesting, they're expecting an uptick in their student loan refinancing business, which is obviously going to be huge for them as those student loan payments begin again, Romaine.
Yeah, let's just take a look. We're actually getting some earnings crossing the wire. This on Avis Budget, ticker CAR. The shares were up a couple percentage points in the regular session here. Adjusted EPS coming in for the second quarter at about $11 per share. That's a big beat versus what the street was looking for, which was about $8.30 here. In line with estimates on the revenue side here. And just taking a look here, when we talk about some of the individual metrics like the number of rental days, a decent little beat there as well as on some of the adjusted EBITDA figures. So a little bit of a mixed bag here, but overall, some of the key metrics, they appear to have beaten the average of what the street was looking for, Tim.
Yeah, Romaine, while you were going through the numbers, I was going through the press release, and Avis Budget's group CEO said that summer travel has continued to be robust with elevated peak period demand and seasonally improved pricing. That's certainly a bright spot, especially after hearing from some of the airlines last week that domestic travel has pulled back a little bit. We'll hear from JetBlue later this week and perhaps get some more color around that. Let's get to some of the decliners, some of the red on the screen this afternoon. I want to start with Johnson & Johnson, falling the most since June of 2020 after a judge dismissed the second attempt at using a unit's bankruptcy case. What this would have done is press tens of thousands of cancer victims to drop their lawsuits and accept a close to $9 billion settlement. So over at JP Morgan, Chris Schott says that it looks increasingly likely that the talc litigation will continue to be a cloud over J&J as it looks to update a settlement structure or begin litigating about 100,000 remaining cases. Ford falling 0.4% today. This after Jefferies cut it to hold with a, quote, heavy heart following results last week, which saw worse than expected losses on EVs. And then this is an interesting one, XPO Inc. At first, you might want to say that shares of some trucking companies like XPO fell today after Yellow Corp told workers it was shutting down. That's according to its union, we should note. But we should note that this was really well telegraphed, according to Thomas Black, who covers Bloomberg Industrial Logistics and Aerospace reporter. Yeah. This was more so a result of actually just it was cut to neutral over at Credit Suisse from Outperform. So I think that's why it was lower.
Yeah, there does seem to be a little bit of a disconnect there, at least when it comes to the catalyst for why that moved down. Let's take a quick look what happened in the yield space. Not a whole lot. We talk about just how tepid the price action was in equities. Similar story in treasuries. And in fact, on a monthly basis, I was just taking a look. I mean, you actually made money on a price basis in the fixed income space, whether it was on sovereign yields or in corporate fixed income. But overall, it would kind of just round trip. There was so much volatility in between. But I mean, you look at a 2-year yield, just to cherry pick something, we're basically at 4.9 right now on the 2-year yield. That's pretty much where we were right around at the start of the month, right just above 4.9. So a little bit of a downtick from 4.93 to 4.88 if we want to be specific, Scarlett.
Yeah, if you just look at the monthly change, not a big deal, but certainly the movement during the month has really raised a lot of people's eyebrows. We also have earnings coming out from Western Digital, the hard disk drive maker, reporting operating expenses. Actually, you know what? Let's start with the bottom line number here. Adjusted loss per share of $1.98. That is narrower than what analysts were looking for. They were expecting a loss in excess of $2 a share. And when it comes to revenue, $2.67 billion, beating the average analyst estimate of $2.5 billion. And let's get to operating expenses now. Higher than what analysts were looking for, $742 million. The consensus estimate was just under $729 million. So as a result, the gross margin goes down to 3.9% from the consensus estimate of 4.01%.
Yeah, Scar, and some encouraging commentary from the CEO in the statement here saying we're encouraged by several indicators signaling improving flash market dynamics. Our two largest end markets, client and consumer, are returning to growth. Inventories are normalizing. Content per unit is increasing. So very much so bad news for the Fed on that statement, but definitely seeing a growth story when it comes to what the CEO is saying.
It's interesting so far. I mean, most of the earnings we've gotten, I think, have been better than expected. I mean, with the caveat, of course, that we know that expectations had come down. So that sort of proverbial low bar, if you will. But this is that week where we start to get, I think, a much broader swath of companies, not just the techs and the financials. You get, the Caterpillars, you get a lot of healthcare companies. You get a much better sense here of where spending is, but also more importantly, where some of these companies see their own spending, meaning their own investments, R&D and CapEx as well. And I'm kind of interested in seeing what those companies have to say later this week.
Yeah, big question certainly has to do with that CapEx and to what extent these companies have pulled back on making those huge investments. And I'm also really interested, and I know you said not necessarily tech, Romaine, but I'm already looking forward to Thursday.
What's that?
When we do hear from Apple, when we do hear from Amazon. Okay. Yeah, those are pretty important.
Is Amazon a tech company?
Amazon's a tech company.
It's a tech company still.
Is it?
Yeah, consumer discretionary, I guess, is what
it's
it's characterized as. But they want you to value it like a tech company.
Is it though? I don't know. I mean, it's like everyone told me Tesla was a tech company, and it turned out it's just a car company.
Yeah, a very valuable car company.
You go tell that to Elon Musk.
I mean,
challenge you to a
I did,
battle.
but he kicked me off Twitter or whatever.
It's not called that anymore.
Yeah.
X.
I didn't get reinstated. So I don't know. Everyone else got reinstated. Have you seen
you
the people that have been reinstated?
I think you can get reinstated if you're willing to pay for your blue check mark.
Yeah, you can get reinstated by doing a lot of stuff that isn't quite kosher here. In all seriousness, though, I mean, when we talk about the idea of sort of what the read is on the economy out of some of these companies, Scarlett, I mean, do you think that Amazon is going to give us a better read on that, or Apple? What?
I mean, those two companies are so far away from the rest of corporate America because of the amount of cash that they have at their disposal, the levers that they can pull. So to your point, Apple and Amazon don't necessarily give us a read on the U.S. economy, the rest of corporate America, but they give us a read on what the biggest companies and the most well-endowed companies have at their disposal.
Yeah,
and the choices they're making about how to manage their cash.
No, well, to your point, that capital allocation is really interesting. And with the AI story, I always think about whether we're seeing companies misuse their IT budgets and whether they're going to pour a lot of money into AI that they could have been spending on typical IT expenditures. Why are you laughing at me, Romaine?
Because we already know where this is going. In a few quarters, we're going to start seeing the write-downs for a lot of companies that had no business chasing after this AI nonsense. Look, there are companies that will benefit, NVIDIA's and Amazon's and a lot of those companies, but there are a lot of other ones that have been trotting out all this spending on AI that are probably going to have to ratchet that back.
I'm still thinking about the metaverse.
The metaverse.
Oh,
Yeah.
Tim,
I'm still thinking about the
You
metaverse.
and Mark Zuckerberg.
You were gone for a couple months. All right.
RIP metaverse.
With that, I am so sad to say that this
You should start
conversation is
your own
over.
show, Tim, called Meta IRL. How
You
about
two, too close to home. That's going to do it for our cross-platform coverage of the market close on Bloomberg TV. We're going to be back tomorrow, same time, same place. Thanks for chatting, guys.
And on Originals.